Hey everybody, my name is Justin. Today I want to talk about Krispy Kreme, ticker symbol DNUT. They IPO'd today. Their stock shot up 23%. So we're going to look at what their market cap is now. We're going to talk about what they were expected to do today when they IPO, because a lot of stuff happened. We're going to take a look at valuation. We're going to look at fundamentals. We're going to dig into the cash flow statement, the income statement. And I'm just going to tell you guys my view on the company, where they're at, where I think they should be at right now, if this is a good deal or not. So if you get some value out of this video, please smash that thumbs up button. It really helps out the channel a lot. If you like this kind of content, I encourage you to subscribe to my channel. And like any other video, this is just my opinion. This is not financial advice, nor am I a financial advisor. So let's just jump right into this. All right, so I'm on Yahoo Finance right now, and as you can see, at the end of the day, Krispy Kreme ended at $21 a share. So interestingly enough, so they IPO'd today, and they were projected to basically roll out at $21 to $24. So it was a shock when there actually was less demand for their stock than originally. So they actually opened up around $17, but they were up 23%, ended up at $21 a share. So let's go take a look at some of the financials right now. And let's look at the balance sheet particularly. And so right now they have about 160 million shares that they issued. And so if we take a look at market cap wise, so 160 million 890,000 times $21 a share. So they ended up around $3.3 billion of market cap by the end of today. And I think they're actually, so they're up about 1% after hours, so not much there. So they're at $3.3 billion. So when they actually opened up this morning, I mean, you're talking at, let's see, they were around $2.7 billion. So it was about a $600 million jump up there. All right, so let's go take a look at their income statement real quick. And it's kind of interesting because I looked at this before I did this video, just trying to figure out kind of where Krispy Kreme is. Is this actually a good company to invest in or not? The revenues have really been going up considerably. So 2020, $1.1 billion compared to about $795 million from 2018. So that's a 41% growth over the last 2 years. So that's really, really good. However, if we dig down to the net income of the company, it's had a different story. So their net loss is actually getting worse. So they had about $14 million loss in 2018 and a $64 million loss last year. Now, I have to say last year, you can't really count in my personal mind. I mean, retailers, restaurants, the whole Roni situation, I mean, it just threw the whole entire, market it just created a lot of uncertainties, and you just have to give a lot of companies just a pass from last year, in my personal opinion. But if we take a look at the cash flow, it kind of tells a little different story. So free cash flow, I really like to look at that. So basically that's basically cash from operations, and then that's subtracting out capital expenditures. So basically what's left over from the company after they're paying their bills for the year. So again, I'm not really going to look so close at last year, the $69 million loss for free cash flow. 2019, they had a positive free cash flow of $4 million and a positive free cash flow, $105 million in 2018. But still, man, that's a pretty big drop off when they were actually increasing revenues year over year. And when I go back and look at the income statement, it's kind of interesting because, where it's coming from. I first looked at their cost of revenue. So kind of like direct sales cost of revenue. That is pretty close. So it was about 69, 70% 2018, 72% for 2020. So their gross profit's actually getting better. The issue is actually in other operating expenses. So this line right here, I thought maybe SG&A was the issue, but it was pretty close. SG&A was around 20-21% of revenue, but this other operating expense is the problem. I mean, it shot up. Let's see. We'll just calculate real quick. So we have, so you're talking $302 million for 2018 divided by 795. That's revenue. So you're talking 38% of the revenue went to these operating expenses. Where if you look at 2020, divided by 1.2 or $1.1 billion. So 44%. So they went from about 38% to about 44% of total revenue. Just for giggles, let's calculate what it is for 2019. See if that's kind of the same trend there. So 41%. So it's getting worse. There are other operating expenses. And the issue with a new company like this, you don't have a lot of data to look at, right? They don't have a 10Q, a 10K to go dig in to figure out what these other operating expenses are. But this is problematic to me as an investor. This is going up. I would want to know what is in this number. The other stuff is more clear, right? So you just have regular SG&A, that's general administrative. Cost of revenue is pretty clear to me. Depreciation and expense, or depreciation and amortization expense, pretty clear. But other operating expense, there's all kinds of different stuff that could be lumped in here. So we don't have a really good idea as an investor. So that's concerning to me. And if we go back to the cash flow statement itself, and so we'll ignore 2020. I don't really count that year. So we got 2019, 2018. You have, again, the best year that they had was 2018. Yet they had $105 million of free cash flow. So a good growing business that is growing their cash flows year over year, I would be willing to pay about a 20 multiple into the future on that company. And that's basically an average. I usually take an average of the last 4 or 5 years free cash flow. So let's just be generous here and we'll say we'll just use a 20 multiple on this $105 million. So in my personal mind, this at the very highest point, a company should be worth about $2.2 billion in market cap. In fact, we could probably just make sure I'm calculating that right. So we say 105 million times multiple of 20, 2.1 billion. So I was a little off there. So $2.1 billion is what I would be willing to pay for this company. And it's trading at $3.3 billion. So right now, in my personal opinion, everybody could be looking at this differently. My personal opinion, people are overpaying by over 50% for this company right now. Now, I know that the CEO has come out and said that they are restructuring the company. They have a good strategy going forward. But looking at the numbers the last 3 years, this does not look good to me at all. So we'll kind of see how things roll forward. We'll have more data as they come out each quarter. Now they did have, as far as revenue goes, and the CEO actually talked about this today. They had $321 million of revenue, which was a big uptick from the year prior, which it should have been because of the whole Roni situation. So, for me, I'm always careful about buying into an IPO anyway. It could go either way. Like Airbnb just shot up like crazy. Where other companies have not had that luxury of doing so. So I always want to see at least a couple years worth of financials before I can really make a good decision. But for me, I would not pay more than $2.1 billion of market cap for this company based on their free cash flow. And that was their best year of free cash flow in the last 3 years. So I'd love to hear from you guys. What do you think about Krispy Kreme? Do you think they should be trading at the $3.3 billion market cap today? Did you buy into the company? I'd love to hear from you. Thank you so much for watching. I'll catch you guys on the other side. Don't forget to like the video. Take care and God bless.